Very good morning, everyone. Welcome to Admiral Markets. My name is Chris. This is a live webinar looking at strategy this time on Wednesday. If we're going to take a look at the markets, of course, very soon and apply this time around wave patterns, wave analysis in general, momentum correction, chart patterns. That's our focus of today. And we're going to take a look at Forex, commodities, and stock indices. If you want to stay up to date regarding analysis, webinars, please follow us on Twitter. Here are the handles. First of all, a quick note, but important one as well. Please realize that this webinar is shown to a global audience but may not be suitable for everyone. Please visit admiralmarketsglobal.com, select your country of residence, and contact an appropriate entity for more details and information. Also, please be aware that trading for exchange and global financial markets is considered high risk. Please seek the advice of an independent financial advisor for more information on that. This webinar is for informational and educational purposes only. By continuing watching this webinar, you agree with this disclaimer and you are aware of the risk involved when trading. So typically when looking at the markets, I do analysis first. I look at trend, I look at the patterns, I then look at support or resistance. These three things give me the analysis, make me understand the market structure. Then I am aware if you know the financial instrument that I'm looking at is interesting from a technical point of view. I check also fundamentals for long-term or news calendar as well. With that behind me, then I look at basically the chart and try to see where are the decision zones, what am I looking for, what kind of trigger, and what reward to risk is available. All right, and then I fill the last details of the trading plan. Regarding that calendar, basically today there is several news events. You want to check that out by going to admiralmarkets.com, click on analytics, go to Forex calendar. You'll see a long list of news events. Their impact is highlighted in colors, as you can see. The PMI Germany manufacturing is one of those red tagged events. Pound has a red tagged event. Dollar too, several dollar ones, including FOMC minutes. That's going to give us a bit more information about what the Fed and is thinking about the U.S. economy and how it interacts with the world and what that means for monetary policy, including interest rates, and if we could still expect a rate hike. If we don't, that would be, you know, in retrospect, quite a, in a way, I don't know how to formulate it, let's say funny maybe development, because you know, last year, December, we had a rate hike finally after years and years, 8 years, right, of flat rates, finally an increase. And the buzz, the talk at that time was, okay, how many rate hikes are we going to get this year? You can go back to webinars. My guesstimate at that time was 1, I think, or 2. I thought it was 1, but you know, it was a year ago, so my memory could be wrong here. But and many thought 3 or 4. Well, it was definitely not 3 or 4. As you can see, at best we have 1. If let's say we're lucky, we have 1. So yeah, that was quite slow. So let's see if 2017 things can, let's say, heat up a bit more and the curve could go up if inflation starts to hike, starts to climb. I think that we could get there. The unemployment rate, well, you could say a lot about that, but is on the lower side. It's below 5%, so definitely has been decreasing steadily from that point of view. So I think if the inflation starts to pick up, we might see that. We might see a couple of rate hikes next year. All right, so with that said, let's take a look. Today's going to be focusing on waves, but I want to basically discuss waves on multiple levels. So I want you to realize that wave analysis, wave patterns, I think are valuable for many types of traders. You don't have to be, let's say, a big fan of waves still to use it in a practical, logical way. One of those logical ways is using it by looking at momentum and correction. So when we look at momentum and correction, we're already kind of semi-wave analysts, right? Or we, maybe not analysts, but we use the building blocks to make decisions. So once we start to label those waves, start to label those momentum and corrections, look at those swing highs and say, okay, start to connect the dots, then we're taking a second step. And then when we start to, you know, really start to label it in a very, let's say, routine, repetitive fashion, then of course we're becoming more and more engaged in that. Not everyone has to go that far, though. As I said, everyone can use it on their own scale that they think is useful, that they feel comfortable with, and it's always good, of course, to take it step by step and slow, and see if it helps your trading, see if you like it, and that's the most important. I think where a lot of things go wrong is that a trader starts, they might not even know that much about technical analysis. They read something about waves, they know a rule or two, at best, and they started right away try to use it for all trading decisions out of the blue, get disappointed, obviously, and give up on that, right? Not everyone is like that, but I think there's a decent number like that, and that's not the way to go. Best is to take it gradually, understand first what the swings are, etc. So take it step by step and see how far is it still usable, is it makes sense, is it practical, and is it fun? Maybe, as you go along, you'll find out that waves are absolutely exactly what you're looking for. Maybe along the way you say, okay, I like it up to here, but not any further. All right, so with that in mind, you can find wave analysis, maybe you probably already know, but admiralmarkets.com, there's a lot of information there, including analysis. So analytical page, there are a lot of tabs here. One of them is analytics. There you'll find fundamental, technical, and wave analysis. There you'll also find our blog, our calendar, market heat map, more information about sentiment, and auto chartist. Good information there. You'll also find a tab about education, all kind of different things connected to education. Besides that, you got info about platforms, which products, how you start trading, information about Admiral markets, and promotions. Yeah, wave analysis is a story indeed, and it basically is a story of price. It connects multiple swing highs into a readable, understandable, logical sequence. So I think, therefore, it should be very popular with traders. It's maybe a bit less popular than you would expect. Stories are very, storytelling, stories, very popular with people. I'm not personally that big of a fan of stories. I don't know. I'm somehow very interested in more in data, but I'm probably an exception in that. But despite that, I do like waves, so that's kind of interesting in a way. But yeah, it says a story about waves, and you can see this explains kind of the psychology. Waves looking at swings is basically looking at market psychology and understanding it. Price action is, markets are not efficient, they are emotional, and they make movements that in a way cannot sometimes be explained rationally. So it's the psychology of the market that is a sum collective of all the human and human interactions and the robots, but the robots are made by humans, or not robots, but I mean automated strategies and stuff. So that collective is impacting the market psychology. And wave analysis, looking at momentum and correction, is one of those ways, uh, is an excellent way to understand that psychology behind the market. I did not start out with waves myself. I was more actually fully focused on, probably like many traders at the beginning, just very focused on, let's say, indicators, signals, entries, and did not, let's say, try to understand the market structure, try to, I wasn't doing technical analysis really, right? I was more into automated methods, stuff like that. Now, that went okay, pretty well at the beginning. Then you know, bump into your typical scenario where I over-risked, lost a large part of the capital, and kept going still the same way. But eventually I thought, I met a trader that introduced me to waves, introduced me to technical analysis, introduced me to understanding the market structure. And he explained to me that what I was doing was just running into a brick wall every time. Uh, and that I would never go beyond that because I don't understand, you know, to read the market, to read the charts. And if I do that, I learn a skill that's valid for life. So that was the moment that I started, you know, looking into in these concepts more deeper. And that's the moment I started with this. So, and once I started, then I never let go, and I kept going because it gave me so much, so many tools and concepts to understand how price was going to move, what were the best decision zones. Once I had that at my fingertips, there was no looking back anymore for me. That's not for everyone necessarily, but so yeah, that was how I started. And basically, so yeah, basically the euro dollar from a wave perspective. And this is let's say a full wave count. And there are traders that do more than this even. They might have alternative already scenarios on their chart. And I don't do that. I think, you know, it might be confusing. So I always show what I think is the most likely scenario. And I try to explain in the text what I think is invalidation, what are confirmation levels. So for instance, at this moment, you see at the top here, a green E and a blue 4. That's a triangle, in my opinion, ending at that high. There was a zigzag ABC that I already had on the chart at the time, pre-fact, that happened during the US elections. We had the wave C here, finishing a triangle. Now that triangle was expected and talked about it for a long time. That totally happened. But one thing that I didn't expect was that the wave E would complete that quickly. That wave E completed quicker, and that moment that I realized it was happening sooner was when price basically broke through this support level like this. All right, until that moment, I was still thinking that the price could expand its correction. So that was in a way a confirmation / invalidation level, all right, of the wave E completing. For me, at that time, when I was looking at, I was expecting the ABC up for that E, or part of the E. Invalidation of that ABC was this bottom. It didn't get invalidated, as you can see, and indeed the fibs made price turn for that C. So when I look at, when I add waves to the charts, I basically look at momentum and correction. I look at I look at the swing high and look at the internal part. So if I look at this, I might look at this on a hourly chart to see if it is behaving like a wave 3. I zoom back out, I see a 5 wave, so I say, okay, that's a 5 wave structure. But all in all, it looks corrective, so probably it's in wave A, but it could be a wave 1 as well. So what we would expect after that, a wave B or wave 2. So sometimes exact wave counts are not clear. There could be, both could be equally likely, but I'll choose one that I think still is maybe a tad more likely. But in those cases, it might not even matter because generally speaking, whether we get a wave B or wave 2 after that is not so relevant. We expect a correction and then a continuation. Whether that's a ABC or a 1, 2, 3, from that point doesn't matter. So I look at, once again, I look at the momentum and correction and try to connect the dots here, connecting swing highs and lows to understand the movement. I zoom into lower time frames to understand more about that particular swing. I zoom out to see the bigger picture. So multiple time frame analysis and looking at multiple swings to understand the story and the structure. Then I look at not only momentum and correction, but correction would often offer chart patterns. So if we, for instance, see here, we see, for instance, a bull flags like this, that would indicate that more upside is probable. If, for instance, I see head and shoulders, that could be an indication that the trend is over, a reversal signal. But I also not only look at momentum and correction and chart patterns, but I also look at support or resistance, because that would indicate if, for instance, price movement is dying down, for instance, as it reaches support. Here we were talking about price basically reaching a fib, if I remember correctly. There's divergence between these bottoms, so price is slowing down because of that divergence pattern. There's a big fib, which is a support level, right? So the momentum is lowering, but price is approaching a strong support level. So those two things mean that there could be a strong chance of a bounce. And indeed, we got the bounce. So it's a combination of looking at momentum, patterns, and support and resistance to understand where the waves will start, where the waves will end, how to label them, what is the most likely labeling, how will it develop in the future, and where could I trade it. I'm always showing you the most interesting, or the most probable wave counts. In some cases, though, the wave count will be more probable than other times. So when I show you the most likely, it doesn't mean that it's necessarily always the same. I will show you the one scenario I think is the most likely, yes. But in some cases, I think there's a higher chance that the wave count is correct than others. With this, for instance, I thought there was most likely it's ABC. That's true, right? That this was an ABC. That was true too. Those were, but let me say it this way. Whether here on the way down, all right, I actually thought that the wave 1 would be finished sooner. That was my most likely wave count, right? But I thought it was more questionable in total where this particular downside could end than the ABC up. So not every particular wave count is equally likely. If you see what I mean. I always show you the most likely one, but not everyone is the same likelihood. So that's why confirmation and invalidation levels are important. At this moment, I think this is the most likely scenario. And I think we're going to see a correction. And I was talking about an ABC potential there to the upside. the confirmation has not been yet received because its price is still going sideways, in fact. One of the things I would like to see for the euro dollar is if price manages to break above orange, the resistance trend line, and if it manages to break above these tops here. If it does that, I think that is a confirmation signal that price is ready to make a bounce at those green lines. Those green lines represent daily and weekly support levels, or I should say support levels from the daily and weekly charts. So strong bouncing spots. So taking into consideration that we have strong support nearby, price has moved down about 700 pips, which is quite a lot in almost one shot. It's quite a lot for the euro dollar. That there's divergence between these bottoms, taking those three things into account, plus we were having a bit of a pause, prices going sideways like that, I think there's a strong chance, there's a decent chance, most likely chance, that price will make that ABC and start wave 2. But the confirmation of that, in my opinion, is the break above that orange and red line. If, however, price breaks through the blue line here, then that would be, in a way, an invalidation level of, well, not necessarily invalidation level of the wave 2. The wave 2 could still happen, but it's an invalidation level that the wave 2 will happen at this moment. What could happen then in that case is price makes one more dip, one more lower low, there'll be double divergence, and then I would still expect a turn at the support and a move up for wave 2. It would just happen at a lower spot. Now, if price breaks through these green lines, that changes the whole ball game, in fact. And in that scenario, well, then we might see an extension. We might not get a deep pullback for wave 2 as I expect now. That would change the whole structure, and that would change basically the whole view. And there could be some really impulsive breakout then in that case. And I would be looking for smaller patterns on the hourly chart, 15-minute chart below this 104, 105, 104.60 for follow through to the downside. I then don't expect necessarily anymore a deeper wave 2 green pullback. So that's when price breaks below the green. If price breaks the blue, then it could still be a wave 2, but it would just make a lower low, and I still expect the wave 2 at those support levels. There'll be double divergence in that case. The wave 2 itself could also become invalidated if price breaks above this 100 level. Wave 2 should never, those are just rules. Those rules, we had webinars on wave analysis before, and you can find that on YouTube. Go to Ivan Markets YouTube channel, and there are a lot of videos there, including some wave videos, and you can search for those using the search functionality there. So the wave 2 is let's say toast if it breaks above the 100. Wave 2 as a guideline could go typically quite deep. It could go even to the 78.6 fib. Anywhere between 50, 78.6 fib would be very, very normal, would be actually what we would expect on average, right? Waves 2 do not typically retrace shallow, would not necessarily turn around and reverse at the 23.6 and the 38.2 fib. However, those levels could be resistance spots, temporarily stopping price. So what could happen is price moves up to the 23.6 fib, we get a bull flag there, and price makes one more dash up to that 50, for instance. That is something that could happen at the 23.6 fib. Wave 2s typically are deep, quick, zigzag, not necessarily very complex corrections. That's our guidelines. They are not rules. Wave 2 doesn't have to be like that. But on average, you'll see that more often. A rule, however, that's the difference between a rule and a guideline. Obviously, guideline is something that probably happens. A rule is something that cannot happen and definitely invalidates whatever we see. The wave 2 green is invalidated if price breaks above the 100 fib level. So that's the current euro dollar wave structure analysis. And just looking at this chart, you see my view, at least, on what confirms and what invalidates this particular story of waves and structure. And obviously the most important part of that story at the moment is this part, really, right? But I still show more. Why do I do that? Well, basically to show kind of to give a bigger context and show how things developed in the past. You know, when price was back in here, we were talking about a triangle. Then when we had a break, I was talking about that I think there could be a hook back before we see the downtrend. There were many people, or at least I had at least several comments at least that was, you know, I had a poll even on Twitter, right? Actually, that, you know, a lot of people were convinced of a downtrend right here already. But according to my wave analysis, I thought that this was still a correction within a correction. And from my point of view, that worked out indeed. So this is how, you know, there's a lot of things I can say about waves. So I'm trying to keep it, you know, as much as keep it as structured as possible, which is sometimes difficult because a lot of thoughts are coming to mind. I'm very excited about it. So about wave in general. So I want to share as much as possible. But this is basically, you know, one of the advantages of understanding waves is I think you don't have only trends and support or resistance to look at, but there is this additional layer, I think, of understanding patterns, of understanding psychology of the market, and kind of looking beyond maybe the obvious, let's say. So let's move on. Talked a lot about the 4-hour chart. So the 1-hour chart will not give us more information. It just shows that I just discussed. It shows the wave 1, let's say, at this moment. This is the current thought. And at this moment, I think there's an ABC zigzag here. And well, let's see. It's not confirmed as yet. As long as price stays above 105.40, I guess it will still be an ABC. Price is still above it. Price is at the moment right now, live feed is at 106.20-ish. So yeah, there were some bounces yesterday here and here, but it didn't bounce anywhere. So it kind of needs to make that upside. Now, with FOMC, if we tie in that news event into this picture, then we understand that there might be some limited movement today. I was a bit worried that, well, not worried, but I had a guesstimate that the market might be a bit choppy this week, might be a bit choppy until the FOMC. And it's so far doing that a bit, indeed. It is, especially your dollar at least, well, the dollar pairs at least are not moving that much. So you can see that under your dollar. The FOMC might change that. I mean, I'm not saying that today might be totally no movement at all. I wouldn't be surprised to see a small, for instance, a small break. But I don't think price is going to be, I don't think it's going to move up to the 50 fib before the FOMC statement, right? What could happen is that we might get a small break, then we might get some volatility during FOMC, and eventually FOMC might be a trigger to see some upside either today or tomorrow. So that's the euro dollar. Let's move on. So, if you look at the daily chart on the pound dollar, you would see a massive downtrend. It would be a fall all the way from above 170. I think it was 171, if I remember is correct, all the way down to below 120. That's a good decline there, and many pips, big downtrend. So from my perspective, this sideways move looks corrective still, and this is still the trend. And I would not only change that if we put a fib on this wave 4. I think it would have to, this is the 50 fib if I remember correctly, it would really have to break above this 50 fib and even the 78.6 fib before I consider the downtrend on this pound dollar to be out of the window or questionable or invalidated. So because price is moving, waves 4 are typically lengthy. They could be quite a large consolidation zone. This is certainly possible, especially when you consider the lengthy downtrend we've had. Not so strange to see such a consolidation zone. It could be even longer, in fact. So that kind of fits. The 50 fib retracement on the wave 4 is a bit deeper than usual, but certainly possible. So at this moment, wave 4 I think is the most likely scenario, and also a pretty probable scenario. I would be surprised if the wave 4 gets invalidated. So what is remaining, I think, is definitely at least one more lower low, and we got some wave 5s to finish. We see several wave 5s, as you can see, wave 5s, and that's because the downtrend has been lasting so long. So one more lower low seems likely. There could be multiple lower lows because you never know. We're looking already at, within the wave 5s, we're looking at a blue 1, 2, which means that we still have a blue 3, 4, 5. And any, the 3 could be extended. So that means we could get another layer with a different color, like the orange, for instance. We could get 1, 2, 3, 4, 5 within that blue 3. So there could be, when I say one lower low, that doesn't have to stop there. There could be multiple lower lows if these waves get extended, and there's a push further like this. However, at that point, once price finishes all these wave 5s, then we do get at a point that we might finish a major pound weakness cycle. And those things are, I guess, difficult to imagine in a certain way. It's maybe easier to look at a 4-hour chart, looking at a monthly, weekly chart. It's difficult to imagine cycles like this finishing and starting. In a way, I can imagine for at least some of us. Even for me, it's, you think about, wow, you're so used to pound weakness in a way. It's been happening for quite a long time. Let me take a look here. The pound started weakening 2.5 years ago, right? It's been lasting quite a long time. So those things can be sometimes difficult to imagine that they could change. Same with the yen strength. Years and years of yen strength, right? Until I think it was 2012, right? Then boom. It was something that I was already looking at, and it took a bit longer sometimes than you think. Well, sometimes it takes longer before it really happens, but boom, eventually, look, bam, huge yen weakness, shift of market dynamics, and let's say a bigger cycle, a bigger wave finished. That could happen with the pound too. I don't know how far it will push. I do think one lower low is likely. More lower lows are possible too. So how far can this push? I don't know. We got one target at 117. 110, 115. That's something we can look at. As this is falling too, we'll get more information about how far it could fall. But then once we see multiple divergences at that point, then it could finish this major wave, major cycle, and pound weakness could be over, and we might see a turnaround and some pound strength. That could be slow at first. There could be some big consolidations at first, and then eventually I think we might see the pound reverse again. How long this could take? Could be 2018. That might take a long time. And what could propel this movement in 2018? Funny enough, it's something that we don't know, obviously. But typically, there will be something available in the fundamentals that lead to this. Now that might sound funny because it almost might seem to you that the technicals are leading and the fundamentals are following. And I know that's controversial maybe for some, but in my experience, ironically enough, it often happens. I look at the technicals and I'm looking, okay, this seems, or waves and technicals, and this seems quite likely the path of least resistance, and the fundamentals seem to kind of fill themselves in for that. So I don't know. That's just my view. Something will happen in 2018 probably, or I'm not sure about the time frame in this particular pound because I would like to see how it breaks with regard to this trend line. But some of the major cycles that I've been looking at in recent years, dollar strength against the euro, for instance, the yen weakness, crash of gold and silver, for instance. Right? Difficult to imagine when gold and silver were in a massive uptrend, but didn't expect that to continue in 2013. Aussie dollar crash, this pound dollar as well, the CAD weakening. There's just a couple of examples of major cycles that I was looking at in the last 5 years. All right. So confirmation, back a bit to reality, is when price breaks through this support trend line. That would be the confirmation for me that price is continuing with the downtrend and that it's breaking through support, obviously, and it's probably making a wave 3. The confirmation of a wave 3 is when price really on the lower time frame starts to accelerate and show big momentum. So something like this on lower time frames and makes shallow wave 4 and pushes further. And the confirmation of a wave 3 is when we put a fib on this swing high of the wave 1 and price passes the minus 61.8 target. So although the break of the trend line is a confirmation of the downtrend, it's not necessarily a confirmation of the wave 3 as yet. It probably is the most likely scenario though, granted. But wave 3s have to really push strongly and far before they confirm them. Before they get confirmed, because wave 3 is the most impulsive. So at this moment, I have the pound still in a complex correction. Now let's see if that happens, but this is not something that I think is necessarily very probable. I think this is most likely scenario, but this is an example where I think, well, it's the most likely, but not a very high probability, because I think it maybe just slightly behind it is a scenario that it breaks and starts to move, which means that I would place the wave 2 above this top. So is the wave 2 completed, or will the wave 2 be expanded? Well, honestly, not much difference between those two. I have it now showing as an expansion, because I still think it's a tad more likely. But the difference is small, in my view. And that's why I'm keeping an eye on these fibs. They would need to break these trend lines. That's the invalidation level of a complex correction, and that we won't see a WXY orange. If price respects those levels, then it will get confirmed, and I would expect the WXY orange for a blue 2. In that case, the complex correction could eventually break above the red, and we might see a move up to the 61.8 or 78.6 fib. I would expect then a turnaround at those fibs for wave 2. Wave 2 would be invalidated if it pushes obviously above this 100 fib level. So that's where you get the the invalidations and confirmations. Yeah, Greg is asking where he can get a crystal ball for these cycles. But I want to add, by the way, that these cycles are not as important because, okay, mentally maybe they give me a heads up, but if you're not a long-term investor, I mean, for long-term investors, yes, grand cycle is important. But if we're trading day to day, week to week, not so important, really. But you can sign up for the weekly wave analysis. It does look at larger waves, looks at daily, weekly, monthly charts. So I can help you sign up if you want. Just send me an email, please, because then otherwise it'll be easier for me as a reminder. Okay? Dollar yen. So dollar yen showing a bit of slowing down of the momentum. So I think most likely that the wave 3 is finished. There could be a wave 4 correction. Now that would change if price breaks above this top, breaks above the 200 fib. Well, then it seems like price is still cheerfully moving on and continuing with this uptrend. So it is at a bounce or break spot. I still think a bounce here is more likely, a bounce for wave 4. But it depends on the FOMC. If there's dollar strength because of the statement, then it could easily follow through still to 112, 112.50, and perhaps further. So that's some wave analysis looking at it now. Now, if you don't have, you obviously can check out this wave analysis every day at the website. But some pairs, there are only 3 pairs here, of course, or not only, but there are obviously maybe some pairs that you're looking at that are not included in that. So besides those majors, if you're not a major fan of adding waves for every specific swing, and I could definitely understand that, then one way of doing it is just using it when something is clearly visible to you. Using it as a tool of confluence, a tool of confirmation, and not something necessarily as the major or main trading decision, or even worse, maybe the only trading decision. If using wave analysis as the only trading decision, I think is not the optimal way. Some traders can do it, but you need I think it only works if you have really a lot of experience. And then you would still use some tools, I think, for entries and targets. But yeah, it's better to use it as if you're not updating waves, just I think best to use it at times where you see something very visible. For instance, like on oil, right? We saw, just to give you an example, we talked about it yesterday, momentum up, here on the hourly like this, we see 5 waves down, we see momentum up. So what is likely at this point? What do we need to know? Well, that this wave 5, what happens after wave 5? Typically, at the very minimum, an ABC. That's one scenario. How about if these 5 waves are completing a bigger correction like this? Well, in that case, we would start a new 5 wave up. So when you look at that information here, at that orange line, right? We don't even have to use labeling to understand that there could be some benefit of understanding the waves and momentum and correction in general. And that is that one more upside in both scenarios is likely. So that's something where we could use patterns and use waves to understand that oil will probably make one more upside there. Now, at this moment, price has made an ABC up or a 1, 2, 3, what is more likely. And at this point, it's, I think, less clear than at this point. But we can still do something to understand whether this is a correction or whether there's a new uptrend. And that is looking at the internal component of this move, looking at how far price has moved as well. So, for instance, we can see that price has retraced shallow. That's not so common for wave 2. Small thing, but something to think about. We see on an hourly chart that there is divergence between these tops. Another reason number 2, why an ABC is more likely. All right? Or I should say a wave 3 is not likely. All right? Because if this is not a wave 3, what is the alternatives? That this is indeed, as I said, an ABC. But the other alternative could be, if an uptrend starts, is that this is a 1, 2, a 1, 2, of a 1, 2 of a major degree and a 1, 2 of a minor degree. And the wave 1, 2, this could get a 3, and then we'll see a 4, 5 to finish a blue 3. So those two now seem more likely than this being a 1, 2, 3, 4, 5. So those are some small points that are helping the ABC up. We can also look at the bigger picture and try to understand, okay, what is the higher time frames telling me? And we see there that it's in a correction. So this could easily be a correction. We see momentum up. So one reason why we might expect a bigger upside. That doesn't help our ABC story, in fact. But we can also understand perhaps that price could, if this is a correction, the correction might retest this bottom first, for instance. So the correction doesn't have to end here necessarily. And we have momentum like this. This could be momentum 2. Sorry, this could be a correction like this. So this could be something like that, for instance. So from a higher time frame perspective, I think it's neutral, to be honest. Both up and down could happen. So that doesn't help us too much. What we can look at is a 50-minute chart now and try to see, okay, it did stop here. How is the downside moving? Is there a clear 5-wave pattern here? And do we have an ABC up? Well, then probably see this. And that, I think, is not that clear on a 15. Let me check a 5. Not so clear to me. It looks like an ABC, actually. That actually does not support a turnaround here. This is looking quite choppy. So although this looks like an ABC, this part here does not really fit with that. So what does that conclude? At this moment, the conclusion is that I'm neutral in a way because I don't think there is enough evidence to say anything substantial. If I had to put a wave count on it, I would probably, but this is one of the scenario where I think it's not really a very high probability, but the most probable I think is still an ABC like this. But is this B finished? Okay, before I say that, this ABC, right, at this moment is the most likely at 61.8 fib, and that's typical for a zigzag. But if it retraces deeper, that might make me think that it's less likely, and if it breaks above the 100, then it's invalidated. The confirmation of the zigzag is if it breaks through this trend line, and price then should target these fibs. And then we'll have to see how price responds at those fibs. All right, so that's basically some thoughts about this ABC. The current upside, what I like about this is that this looks like an ABC zigzag right to that fib. For me, I guess the confirmation would have to be if price breaks through support like this maybe. Let's see. This formation does not give me much material to work with for looking for a turnaround at this point. But if it breaks through support, that makes some kind of pattern on the lower time frame, I think we could see follow through like that. So that would be the confirmation of, for me, this probably being an ABC. Considering this choppiness, I wouldn't be surprised maybe to see price retest the resistance. I would not be interested in going long because it's too close to major resistance. So that's basically the trading decisions, or not decisions, but my trading thoughts that I think of personally from my perspective, even though the wave analysis is not, there's no very probable wave analysis at this moment. Aussie dollar. We could definitely, let's take a look at Aussie, and there was a question about pound or reference to pound yen. Aussie. So yesterday, talking about Aussie, I thought there could be an ABC zigzag here, but I was expecting then a bounce for upside. So the bounce happened, but it happened a bit differently. We saw that we didn't get the ABC zigzag here, but price actually turned, made a higher high, made one more correction like this, and then started to make an upside. So that was basically all part of the fact that this swing high, swing low seemed to be completed from my view, and I thought we were going to see a retracement of that downside. Now, how far can this retracement push? It looks a bit questionable at this moment. Doji and price broke already below last hour's low. If we get a close like this, I don't think it will push any more further. It already hit the long-term moving average. It hit R2. So this push that I was talking about is probably completed. And I would not be surprised then to see price make a bit of retracement back to the pivot point, to the S1. And then it all depends on how price moves lower here. Is it choppy and slow and corrective? Then these bouncing spots, these support levels will probably act as a bouncing spot. These support levels will act as a bouncing spot, and we'll probably see an expansion of the correction. In that case, if price moves choppily like that, I think that there's a good chance that price will go deeper at this moment. It looks like there could be still space if it retraces all of these, this entire swing high, swing low. Price might do this, like this, and then it can move up to the 38.2 fib, and perhaps even to the 50. We'll have to see. And it could expand the correction to the opposite side, to the upside, sorry. Then at one of these fibs, I do expect a major turnaround, and then we should see a follow through of this momentum. So what would that mean for my trading? That means that if I am looking, if there's nothing else available, then I might think about a counter trend trade on the Aussie, a counter momentum trade, I should say. Trend is still down, momentum is up though at this point. What does that mean though? If I catch a trade here, that means that if price starts to move choppily like this, then I'm going to be very aggressive in reducing the risk, moving it to break even, or exiting that trade if price behaves like this, because I know in that case that there's a good chance of expansion to the upside and my short is not going to do as I want it to be. However, if I manage to catch a short and price then flies down like this with a lot of momentum and starts to make a bear flag, I can move it to break even too, by the way, because it's moved so much, but then I would expect follow through to the downside. So in general, it could be an okay shorting zone because either it does this or it does this. That seems the most likely. What could be the alternative is that it keeps pushing up despite the divergence, and it reverts quicker than expected. So in such a scenario, sometimes it's unavoidable, and that's when reversal trades end up in losses. Very plain and simple, to be honest, if it happens quickly. In some cases, if the 50-minute chart, for instance, is doing this already, and I don't even see it on the hourly chart, then it could already be worth being cautious and trying to manage that trade in some case. All right. Now, I myself am a bigger fan of trading it with momentum. So I tend to look for other trades than this. They get my preference, and it would not be high on my list of favorite trades, let's say. What could happen though, as I said, if it moves choppily like this and price then bounces, things I could look for are candlestick patterns in this zone, time patterns in this zone, breakouts above resistances. Those would be all confirmations from my point of view that a bigger correction is happening and we might see this. So those are things I would be looking for, bounces and breaks in these zones there. Anything else to say? Let's see. So if the hourly candle closes like this, we got two bearish candles. I think that it's not a confirmation as yet, but I think there's a good chance that there will be a small retracement and another bearish candle. And if 5 to 6 candles stay here, not breaking these highs, I think we'll probably see that bigger correction down to this zone. And then we'll have to see how price responds in this zone. I would expect a bounce at this moment. So if I had to judge both kind of scenarios, from my perspective, this zone for long is more interesting because there's a bigger zone to deal with than here, the red circle. My 2 cents. But of course, if price breaks through this zone, then there could be quite a lot of space to the downside. But I'm not expecting that break. But if it does break, of course, then I'm switching my vision. In that case, we got a pretty clear break, and there's probably a strong chance of a follow-through and a break below this low. Pound yen. So pound yen has arrived at a spot where prices at support. The yen weakness might mean that this swing high, swing low is completed. And not necessarily because of the pound. The pound, I still expect some weakness, but the yen weakness could be stronger. And what could happen is that when pound weakens against the dollar, that it makes a retracement. But when the yen weakens, it moves up again like this. Ultimately, I think considering the support level of the monthly chart, there's a decent chance that this swing high, swing low is over, which means that price could be retracing this entire swing high, swing low. So if we put a fib on that, these are some levels to deal with and reckon with and be aware of. So now, just the fact that this swing high, swing low is over doesn't mean that this will push on forever. There could be some ups and downs here too. This has moved up quite a lot. Anything the moving average here. And we see some internal divergence between these tops. So there could be some correction here, and we see already a bit of that happening. So, the follow-through to the upside could happen if we break above this resistance. For the moment, though, I wouldn't be surprised to see price kind of slowly correct lower. And from this perspective, maybe not very interesting to trade. But on the hourly chart, you see that when there's divergence present, especially double divergence like this, there's a good chance price will get back to the long-term moving average. So that seems the most likely scenario at this moment. So when double divergence appeared, and we had 5 to 6 candles not breaking this high, and we had an engulfing twin here after 5 to 6 candles not breaking this high after double divergence, you might understand that that would be, if one was watching the charts at the time, a pretty interesting reversal moment. Anyone taking that trade at that point is up, can move the trade to break even and target the S2, for instance. That would be a pretty good moment to trade that reversal, my point of view at least. Now, because it's a reversal, breakouts like that, possible, but dangerous though. Yeah, sometimes okayish, depending on other, let's say, factors and other confluences that we can see. At this moment, price is at S1. So if it breaks through S1, there could be that space down to S2 and S3. That's a counter, let's say, trend at the moment, but from intraday perspective, it makes sense. And it could fill up that zone there, but it's not a swing trade because the target is nearby, from a higher time frame perspective, from an hourly perspective. I think what could happen though is that from a 15-minute world, if we get a break like this, and we see on a 5-minute chart, 15-minute chart, a bear flag like this, almost going back to the S1, I think we could see the downside to S2, perhaps an extension to S3, depending on how much downside we get today. So that would be my view on pound yen. Not the ideal place to trade it, but okay. The better one was a bit earlier, but still possible, in my view. Now, would this be my number one trade today? I don't know. Probably not, I would say, but some days could be. Depends what the charts are offering, what the structure is on other currencies. I always give preference to trades that are making a retracement within a trend. This is not a retracement within a trend. This is a bigger retracement reversal trade. So if there is any, or maybe not any, but if there is a currency pair or financial instrument that is pulling back within the trend, that would get my preference. So yeah, the trading this zone here, I would personally be looking at 15-minute chart, but I would also keep an eye on the hourly chart. I would like to see a candle like this, strong close near the low, and we could see a retracement of that candle, for instance, and a follow through. Now, what if that doesn't happen? Or what if price makes a break and there's a quick move up again? In that case, I'm not looking for shorts anymore. Okay, then there was, okay, we had, let's say, an ascending wedge break like this. It's an ascending wedge, broke, turned out to be a quick break or a false break or however you want to call it. It's moving back up again. Those are definitely one of the dangers of trading reversals and bigger retracements. That could happen. And that's why I want to keep an eye on momentum, see what happens when price breaks it, if there's something like this going on or if there's something like this going on. Ultimately, I would only be bullish if price really has to prove itself to me by breaking this trend line with momentum, and probably then I'll need to see a bull flag, and then I would be willing to trade it above the pivot point like this. Right, in that case, on the hourly chart, this was a correction. This is, let's face it, a choppy correction. Prior to that, there was momentum. So sometimes you want to zoom out and see the bigger picture, not get too bogged down in details. Like, not getting, if you only look at the downside potential there for price to move back to the long-term moving average, but it doesn't have to do that. Let's also keep in sight that this is still a slow correction relative to the upside we've seen so far. So that's why I'm still open to the fact that this is just a correction and that this could occur from PP to R1 and perhaps an extension from R1 to R2. Then I would definitely be on guard because then there's triple divergence in the meantime, and the R2 could be the bouncing spot, for instance, for that bigger correction finally. So 5 to 6, let's see, question, what 5 to 6 candles show, for example, from last top? Okay, so I'll zoom in. So my time pattern rule is that basically momentum is finished. You see momentum in here is lasting because there's higher highs. That's what I'm looking at, but also many higher lows, but the rule looks at higher highs. But one candle not making a higher high is not that important. My rule is that if 5 to 6 candles don't break for a higher high, then the chance of that swing high, swing low is over, basically. All right. So when 1, 2, 3, 4, 5, 6 candles, right, not breaking this high, that swing high, swing low is over. The question is whether this is the moment of a reversal or whether it would just be an expanded correction. That's basically the main, at that point, the main thought. So when I look at divergence, taking that into account, that swings things, that pushes things more favorably to a bigger retracement or bigger correction, which makes it interesting then in that case to look for a reversal trade. 5 to 6 candles. Sometimes I put a fib like this, look for a retracement here. That could be a turning spot for a bigger correction. Now the fib itself could hold, but another way of doing that is to look for a candlestick pattern on the hourly chart, for instance, or even look for a candle or maybe even a time pattern on a lower time frame, like a 5-minute chart, for instance. I see the move up to the deep fibs here, right? But is it going to respect the fibs or not? I don't know. Let's wait. 5 to 6 candles. 1, 2, 3, 4, 5, 6 is bearish. So there could have been, basically a trigger. The 6th candle bearish, not breaking this high. That could have been a short as well. Kind of a confirmation signal there. So this time pattern is something I only use though if I have reason to use it, meaning there is there's basically there's not the only piece of information I use. So there's some resistance nearby, and the divergence, double divergence. Okay, I'm saying okay, that's a reversal zone, or continuation zone, and then it makes sense to look at that. Well, I mean, it could make sense to look at it in more cases, but I, let's say, don't use this technique as a continuous way of tackling the markets. So here you see, for instance, the push down, and you see 5 to 6 candles now breaking this low around here, and you see indeed that there's a bigger correction. But how does that correction go? Sideways, right? So eventually we did get the break and continuation of that momentum. Now the question is, will we get followed through further? All right, so any questions? So it's always good to go ahead and I hope I answered your question, Care to. So yeah, basically that's how I count. See a bit of momentum here indeed, not that much, but helps support that as well. So any questions, let me know. So it's always good, I think, to look at what-if analysis. That's why I'm using always confirmation invalidation levels, confirmation invalidation tools, because I am not, let's say, just blankly trading what I expect from waves. Or I'm not just blankly trading, let's say, my bias in a way. I am looking at the market structure, assessing what's the most likely, but then waiting for price to confirm that and following price where it wants to go. So it's always good to think about what if I'm wrong. Where would I know I'm wrong? How would I react? What do I do if I'm right? That's why I'm looking at decision zones and triggers, confirmation and invalidation levels. After I did my analysis, which is trend, patterns, and support and resistance. So the labeling itself is not for everyone, but I still think, just to sum it up, that knowing about the waves, using it at times that make sense, that you see it clearly, taking it step by step, gaining experience, will help with understanding the market structure. And I think the more practice you get into it, the more fun it will become as well, most likely. All right, so someone in the past asked me about complex corrections. When do you know that they start? And that has also to do with the wave structure. Let's say, for instance, wave 4s are more complex than normal, right? But also, for instance, with lower and higher time frames, like for instance this Aussie or the Euro dollar, maybe a better example, it is close to support, right? So I think additional reason why we might see a bigger push up. Or the Aussie itself, for instance, is this all the upside? I think could be a pretty good chance that could be a bigger, complex correction, because I think there could be a deeper retracement first, looking at these fibs, for instance. So I would anticipate already a more complex correction. But also looking and zooming in and looking at smaller time frames will help, because looking at the hourly and 50-minute chart, I will be better able to assess if this is correction like this. That means too that there's a higher chance of a more a complex correction, because this part is corrective. So that's how you can make some of those assessments. And Craig has an interesting observation, saying that he saw a pattern today called the Gartley, and that it looks like it resembles any wave. And yeah, it's a fib pattern. It uses fibs indeed. And fibs and waves go very well together. They go hand in hand together, because fibs naturally fit on those swing high, swing lows that are waves, basically, right? This is all waves. So when you look at swing high, swing lows, you're really looking at waves as well. So putting fibs on these swing high, swing lows is very natural fit. That's why they work together. But you can use fibs as a standalone too, but you still need to understand where to put the fibs, and looking at swings is a very logical way of doing it. But it's not the only way to do it, though. There are other ways to use fibs, but you put a fib on a candle, for instance, could be also possible. So there are different ways of using fibs, but one very natural way is to use fibs with swings and waves. So a Gartley pattern, for instance, is for instance like using a swing high, swing low, and then looking at the correction like this. And it does a bit different labeling. It has, if I remember correctly, like A, B, C, D it uses instead of A, B, C like this. Doesn't really matter. Just a different way of writing it. Not so important. And well, basically, it looks for fib ratios here and from here to here, and for targets. So yeah, basically it's looking at waves and fibs, but it just kind of labels a pattern. So I don't really use these particular patterns because, well, I don't see kind of the added value to waves. If you don't use waves, then I guess it makes sense. When I look at this, for instance, what I see is impulse up, and I see an ABC correction down. What I do is put a fib, two fibs. I put a fib from here to here, For support fibs, I put a fib from here to here for targets of the retracement. So that's how I would do it personally. And then I look for bounce at the end of C, like this. And whether this, I don't know if this is an A or 1, or if this is a 2 or B, and we go up for 3 or C. That depends on higher time frame structures, and we need to see more of the chart. But very similar indeed, absolutely. A 900 pip drop, wow, on the dollar yen. Well, who knows? At this moment, I don't think it's likely considering these two weekly candles. I don't expect it this week. I would be shocked if that happened this week. I don't think you would hear me in the webinar next week. Yeah. No, I know, Craig. I know that. I just responding to the comment, not. But you never know. In the markets, it's really nothing's guaranteed. But so I'm not saying it's out of question. But for the moment, with these two weekly candles, momentum is on on the upside indeed. What I will keep an eye on is how price responds to these fibs, like 112.50, the 50 fib, for instance. Stopped at the 23.6. It smashed through the 38.2. So I wouldn't be surprised if it stopped at the 50, for instance, 112.30. And we'll have to see how this reacts to the 50 fib. If it makes a bull flag, more upside is likely. That's what I expect at this moment, is price to make a bull flag and make a push up to that 50 fib, or if it makes a smaller bull flag and pushes up, then I would still expect two bull flags then. But maybe there's some Gartley pattern, like, I don't know exactly, maybe something like this is the momentum, and then this is the correction, and then this therefore would be either here or maybe at the 50 fib would be the turning spot for big downside. And considering, yeah, if this is an ABC and this is like a momentum pattern down, that might happen. But for the moment, I don't think so, because I still think that this is a correction of a bigger upside. I see this as a 5-wave pattern, which means I consider this to be a correction, which means I was looking for a bounce at this 50 fib. What happened? We can put a fib on it. All right, we got the bounce, and we're getting an impulse to the upside. So far, it's kind of confirming what I expect. Doesn't mean that it has to do necessarily and continue to do that. But so far, I think that there's good evidence that this is 5-wave. This is correction. Now, this correction was pretty momentum, so I can understand why people might think that this itself is not finished. So that is an alternative scenario that, something like this could happen, or something like this could happen, a triangle or a zigzag. Those are things that you want to think about, but ultimately I think there would be more upside. Now, whether it's the 50 fib, we don't know 100% yet. There was a bounce though, that's for sure, obviously. And there's a good chance it could be the 50 fib, but it could be a lower one as well. One thing is that I think eventually we'll get a higher high here, just based off this 5-wave pattern. Now, I do admit that this downside was a bit stronger than I expected. I was expecting a downside here, 5 to 6 candles, not breaking the high, divergence. So I was expecting a correction down to the 23.6 fib and 114. At that time, that seemed quite ambitious. When it was up at 124, in retrospect, it went a lot further than that. It went all the way down to 100, actually. And it actually moved a bit more with more momentum here than I would have expected beforehand. So that particular momentum push kind of does raise some questions about whether this is just a very expanded wave C or maybe still a bigger correction. So we'll have to see how price responds as this is pushing up. At the moment, I'm labeling it as a 1, 2, 3. A wave 3 has to push high and far. So what I would not expect is price to make a substantial correction. So that means that at most, I would expect price to, if it is a wave 3, it should not correct too much, which means I would not expect price to move more than 107.50. If it breaks that, then something else might be going on, and this might not be the wave 3 that I expect. Anything above that, anything like a corrective like this, I'm expecting bull flags, triangles for further upside. That's what I should see if this is a wave 3. Sorry. How long can the dollar go? I think it could last for a while if we get interest rates next year increases. And inflation, 2017 could be a year that the dollar still continues, I would say. And we might see the euro dollar push for lower lows, but eventually then next year, somewhere next year, that will end that trend probably. And maybe 2008, we might see the dollar weaken again together with the pound. Let's see, step by step. Thank you. Let's see, take a look at the Aussie. Yeah, indeed. Completed there. Aussie did have two bearish candles, although this was a bit of a wick at the bottom, but it is following through. It choppy start, as you can see, but now getting some momentum. That happens sometimes where a kind of like a bull flag pattern, it looks like a bull flag, but it actually is a turnaround. It's just a slow start. And that's sometimes difficult, but that's why support and resistance is important, and divergence is important. There was divergence, there was resistance, there was a big push up already. Those three things, I think, made it more likely that that was a reversal after 5 or 6 candles than a bull flag. This was this 5th candle here. How long can the dollar go up? And then we'll wrap it up. I already answered that, sorry. Next question, please tell me what is the pound asutium? I'm not sure what that is. Can you repeat that word? I think I'm missing something there. Oh, pound is moving lower actually. The fundamentals. Let's take a look. I'm not sure what to expect from that, to be honest. There are some, indeed, Bank of England announcements, and I think that could just go either way. It could be a lot of volatility. I don't have any expectations personally on that. Good to be careful with the pound in any case because it looks like in a tough spot. Plus with these announcements, I would just probably wait for price to react to that. Outroom, okay. Got it. So yeah, nothing specific to comment on that, but besides the general, I would say, warning that volatility, and I think probably just to wait, for me, I would just wait for price to respond to that. All right, so I got to push off now, folks. Thanks for joining this webinar and hanging in there for a longer webinar than usual. Appreciate it, and you can find more webinars today with Neda. He's taking a look at it, where to search for entries. Tomorrow, Neda and I take a look at how to identify key decision zones in the market. One of those topics we talked about today. That more discussion on that tomorrow. And next week we got the usual lineup again. And so hope to see you soon, and have a great day. Cheers.